Good afternoon, everybody. My name is Henry. I am here from the Kent and Victor Chamber of Commerce. Welcome to Business Bites. I am delighted to be joined by Stuart and Vinnie from Chamber Patron Members MHA, who are going to be delivering this Business Bites session for you. Please, if you have any questions at all throughout the session, put these into the chat and we'll make sure to answer these in our Q&A session at the end. So I'm now going to pass you over to Stuart and Vinnie, who are going to be delivering the session. So over to you two.
Great, thanks, Henry. Good afternoon, everyone. I'm Stuart Chipperfield, Tax Director here at MHA in Maidstone. And today, me and Vinnie, we are going to talk to you about an update on individual business owners, things that have happened in the recent spring budget, and also some things that have happened recently. And also, we've got the autumn statement coming up. So that's a hot topic at the moment. So we're going to have a chat about that. So no further ado, let's crack on. So there's the mug shots for everyone. So we've got the agenda today. So Vinnie's going to have a chat about pension changes that have come in, the high income child benefit charge changes that came in the budget in the spring, making tax digital for income tax self-assessment, which is a massive change that's coming up in a couple of years for the self-employed and land and property owners. 60-day property capital gains tax charge was talked about, and then I will finish off by looking at R&D tax credit relief claims and some changes that have happened to that recently, and also the autumn statement and what's going on there. So no further ado, I'm going to hand over to Vinnie, who's going to start off talking about pension changes.
Good afternoon, everyone. Now, our first topic is pension changes. In the 2023 budget, Jeremy Hunt announced some major pension changes, namely the annual allowance for tax relief increased from 40,000 to 60,000. The adjusted income limit increased from 240,000 to 260,000. Money purchase annual allowance limit increased from 4,000 to 10,000, and the lifetime allowance charge was abolished from the 6th of April 2024. Now, it's greatly anticipated that pensions are going to be one of the key areas that are targeted by the Labour government in next month's budget. This will be addressed by Stuart later during this presentation. Next slide, please. Right. Next, we're going to be moving on to the high income child benefit charge. From the 6th of April 2024, the threshold was increased from 50,000 to 60,000. Where income exceeds 80,000, the amount of charge will equal the amount of the child benefit payment. Where income is between 60,000 and 80,000, the rate is equal to 1% for every £200 of income that exceeds 60,000. Now, the objective behind these changes was to continue to withdraw child benefit from those high income families without unfairly penalising those on middle incomes. Next slide, please. Thank you, Stuart. Making tax digital. Now, making tax digital for income tax self-assessment is coming into force with effect from the 6th of April 2026. And it's important that taxpayers and their agents start to prepare for this new digital tax system sooner rather than later. Making tax digital, excuse me one moment. Can we just, give us 1 second. That's it, lovely. Sorry, apologies, guys. Making tax digital, our plans to digitise the tax system. It's an extension of making tax digital for VAT. The start date has been deferred from the 6th of April 2024 to the 6th of April 2026. From the 6th of April 2026, individuals with receipts of more than 50,000 from both trading and property businesses will need to use software to maintain digital records for their businesses and make income tax filings to the revenue on a quarterly basis. This will replace self-assessment obligations. From the 6th of April 27, the making tax digital threshold reduces to qualifying income in excess of 30,000. Now, the new regulations are disapplied to certain individuals, for example, foster carers, those individuals that don't have national insurance numbers. However, the regulations are still silent on issues such as international, accounting periods that don't align with the tax year. Having said that, as Making Tax Digital doesn't actually go live until the 5th of April 2026, the revenue still has time to iron out any issues. Now, actions that need to be considered now are for taxpayers and their agents to consider software options to start to prepare for the new regime. Businesses can start to keep digital records at any point, and it would be our recommendation that this is done ahead of your Making Tax Digital start date. This will assist you in getting used to the record keeping mechanisms. Where you have an agent, you should also discuss with them how to approach the record keeping and the quarterly reporting requirements ahead of your start date. Yeah, next slide, please. Now, 60-day residential property capital gains tax returns. Surprising that although these rules came into force from April 2020, the number of individuals we continue to come across that are still unaware of the requirements to file a property CG return 60 days from completion. In view of this, we felt that this session would prove useful to draw this to your attention. Now, as I mentioned previously, this new regime was introduced with effect from April 2020. UK residents are required to report and pay estimated capital gains tax liabilities on disposals 60 days from the completion date where a liability does arise. HMRC will charge penalties and interest on late filing and on unpaid tax. Rules apply to individuals, personal representatives, joint owners of residential properties, partners, partnerships and LLPs, trustees. Non-UK residents must report all sales and disposals of UK property land, even where there is no obligation to pay any tax. Now, can I just pass you back over to Stuart?
Yeah, thanks for that, Vinnie. So first thing that I'm going to have a chat about is research and development tax credits and the changes that have happened to those. So R&D tax relief can provide a valuable financial support if you are a business that is investing in innovation and developing new processes, products or services. The previous government had a target to raise investment in R&D to 2.44% of UK GDP by 2027. I see no reason why Labour would want to stop this, and so I'm sure they'll be carrying on with that. R&D tax relief contributes to that goal by reducing the cost of innovation for UK companies, and the government wants to make it more effective to increase what they call additionality, which is the extra R&D spend that companies claiming the relief make. HMRC are introducing changes to the R&D claims process in order to tackle errors and suspected abuse of the R&D tax relief regime, which have escalated in recent years. HMRC's annual accounts continue to highlight its continued concern with the accuracy of R&D claims. HMRC identified a pattern of irregular R&D claims as far back as April 2022 and therefore established an inquiry unit. They have commenced a wide range of compliance activities targeting both large and small companies to counter this tax risk. Reforms to the rules have been introduced, which means that understanding exactly how the R&D tax relief regimes work and when the many different changes come into force probably is of critical importance to companies and their financial projections going forward. Important changes to the way R&D claims must be made came into effect from 8th of August 23, requiring companies to provide an additional information form with any submission. And also in addition, they've recently introduced a pre-notification notice, which needs to be made before you submit a claim if you are doing an in-year claim for the first time, which has caused significant issues with people doing their claims because it hasn't been widely publicised. As of April 2024, the two separate RDEC and SME tax credit schemes have been merged, which is in order to streamline the relief, but also to help control its overall costs that was being incurred by HMRC. And now we're just going to quickly move on to talk about the upcoming budget and also what we think some of the issues that the Labour government are going to face. With the new Labour government, the question in our minds is, what will this change in government mean for UK businesses? Labour have announced a return to one budget per year in the autumn, So the autumn statement for 2024 will be on the 30th of October. Going forward annually, we're going to be in either October or November. This gives 4 months before the new tax year for the changes to be implemented. The conundrum for them is, how do you not raise taxes, especially in the short term, while generating the income to pay for the investment required to tackle the challenges the UK is facing? The Labour leadership has heavily highlighted economic growth, with the party asserting that it is the best and sole path for the UK economy to generate the necessary resources to tackle the numerous challenges. While we await further details on the Prime Minister's plans to achieve these goals and how the new government will support UK businesses, let's look at what we know about Labour's policy priorities. The Chancellor has said that Labour won't raise taxes that promote growth, and Labour will implement clear rules on tax and spending policies to ensure economic stability. To provide this greater stability in business taxation, the new government plans to cap corporation tax at 25% for the entire parliamentary term. This measure aims to offer predictability for limited companies in the hope it will facilitate long-term planning and investment decisions to drive growth forward. Additionally, Labour will roll out a new tax plan that allows businesses to fully deduct the cost of their equipment and other capital investments. The full capital expensing scheme, which was introduced under the Conservatives in the immediate aftermath of COVID, is to be made permanent and aims to help businesses reinvest and update their operations. Annual investment allowances, which provide a 100% first-year allowance on capital expenditure, will also be increased to make it easier for small businesses to afford these investments. Also of interest with businesses is the intention to explore a greater use of what HMRC call rulings and clearances. These will set out the tax treatment of a potential transaction to provide more certainty to businesses, and certainty is critical for business success. I think these clearances and rulings will be a case of you can apply to HMRC. There is limited opportunities at present, but I think they're going to expand these to far more opportunities to allow for you to get clearance on a proposed transaction. Many reports, including the Treasury Select Committee's report on access to business finance, have highlighted the difficulties SMEs in particular face in accessing the funding they need to grow. This is especially acute outside of London. To address this, Labour plans to reform the British Business Bank, giving it a stronger role in supporting and investing in small businesses beyond the capital. Unfortunately, no specifics about the shape and scope of this reform are known yet, or how the funding will be allocated more fairly. Hopefully that will be out in the not too distant future, and we can then look at that. Another thing that Labour have talked about is late payment of invoices, which has always been a big issue for many SMEs. It can have a critical effect on a business's cash flow. Although solutions like invoice finance can really help here, knowing when your invoices will be paid and having the ability to rely on fixed dates for payment would drastically help all businesses. Sadly, many invoices are still settled late, putting unnecessary pressure on cash flow. Labour has pledged to eliminate late payment of invoices to small businesses by requiring large companies to report their payment practices in their annual reports. This measure is expected to name and shame late payers and hold them more accountable. Undoubtedly, this may help for people that have interactions and have many customers that are large businesses, but I don't think it's a magic bullet and won't solve the issue, and is only part way towards that. Labour have also said that they are replacing business rates with a new system of business property taxation that will hopefully rebalance the burden between high street businesses and digital multinationals. In addition, Labour pledged to reform the apprenticeship levy into a more flexible growth and skills levy. They also will ban 0 hours contracts and end the practice of fire and rehire. So business owners with employees will need to be across all these changes if and when they do happen to make sure that they've got compliant with them and they don't affect the business too much. The tax shortfall is estimated by Labour to be 22 billion, but they have said that they will not increase income tax, national insurance contributions or VAT. So we are left with the question of what taxes are left for them to raise in order to get the additional tax revenue needed. One of those taxes that immediately comes to mind, as has been talked about in the press recently, is capital gains tax. And so we could have a rate increase. Currently, the rates are 18 and 24% for residential property capital gains, and also they are 10 and 20% for any other gain that's incurred. What has been suggested is that the rates could be increased to a level that matches income tax rates, which are currently at 20, 40 and 45%. The rate that would apply to a gain will depend on the size of the gain and how much income the individual has incurred in that tax year. So if you have a particularly large gain, then a rate of 45% could well apply to the majority of it, which then obviously generates a far larger capital gains tax bill compared to the rates we currently have. In addition to rate rises, this could be combined with removing some of the CGT reliefs that are currently available. Of particular interest to business owners and entrepreneurs will be whether they announce any amendments to business asset disposal relief. This is a relief which enables someone who sells their business to get a 10% tax rate on the first £1 million of the capital gain, and it's about as good as it gets in terms of tax reliefs that are available for capital gains tax. We currently have clients that, on the back of their concerns that capital gains tax rates are going to change, have accelerated their retirement plans and have decided to put their companies into liquidation to ensure that they can access this valuable relief on the assets and the cash that are held in the company. And so as a possible planning point here, if at all possible, you can look to accelerate any capital transactions that you've got planned to occur and complete pre-30th of October, as the rates and reliefs will not be any better than they are now, and most likely will be worse off after 1st of November, as I think any changes will be legislated coming straight after the budget, rather than waiting until the new tax year in April 2025. Next is inheritance tax, which, from a business perspective, the availability of business property relief is very valuable, as it is an IHT relief that provides up to 100% relief from inheritance tax on shares and assets used in a trading business when someone passes away. This means that a trading business can be passed on to the next generation without incurring an IHT liability. I can't see the relief being removed, as it is vital to encourage the continuation of businesses, but HMRC are not happy that IHT saving schemes have used this relief for other purposes to mitigate IHT, which it feels that the legislation was not originally intended to do so. Therefore, the availability of the relief may be tightened to try and put a stop to some of the ways that has been applied previously and has been seen in the past. This has had unintended consequences, which quite often when the legislation comes out have not been noted until down the line. So something we need to look at to see whether that happens again. Moving on to pensions, which Vinnie mentioned about before. A pension review has already been launched by the Chancellor, and she could well announce changes to pension tax reliefs. Currently, personal pension contributions receive tax relief. Basic rate taxpayers receive 20% tax relief on their contributions, whereas higher and additional rate taxpayers are entitled to 40 to 45% respectively. The scrapping of this tax relief for higher and additional rate taxpayers could help the government raise literally billions and be an instant win for them. There have been suggestions about possibly imposing a universal flat relief of 20% across all basic, higher and additional rate taxpayers, and is something that could well happen. So as a planning point here, if cash flow allows within your business, you could look to accelerate your pension contributions to occurring pre-30th of October so that you gain the most benefit from the tax reliefs that are currently on offer. VAT, won't touch on this too much because with the promise that VAT rates won't be changed, I do not think there is much to talk about from a business perspective, to be honest. The only major change that Labour have mentioned is the application of VAT to private school fees, which has already happened. Finally, HMRC could be getting up to an additional 5,000 staff to bolster their inquiry and inspections team, as the government believe that a significant amount of additional tax revenue can be found, and so they're willing to pump a lot of money and resource into this. So it's probably likely that if you haven't had a VAT or PAY inspection in the last few years, you'll most likely be getting one in the next couple of years once they bolster their numbers and train those people up. We will also likely see an increase in inquiries into areas such as IR35 or off-payroll working, as it has now been referred to. In the past, HMRC have just not had the manpower and resource to look at these type of areas. And so if they do get a significant increase in numbers of staff, I'm sure they will start to look at these areas and focus on them, because they are definitely an area that they feel that they're not happy about, and they feel that people have taken advantage of the rules as they currently are. And so they will start to look at that, and maybe we'll see some test cases going through the courts in not too distant future. In terms of what we think's happening, that about rounds things up. We're more than happy to take any questions that anyone has. So I don't know, Henry, is there any questions that have appeared in the chat so far?
The only question we had was from David, who was asking about whether the slides will be sent to the attendees after. As long as you two are happy to share them, I can share them out. Equally,
More than
we
happy
have
to do that.
perfect. Equally, we have recorded the session, so you will have access to all of the slides and information through that. I actually had a very quick question before anyone else did. How can the attendees that are here today and others that have watched the webinar on the YouTube channel stay up to date with the upcoming changes and important key dates that you mentioned earlier?
Yeah, indeed. I mean, I think for us, from an MHA point of view, our website, we have a specific autumn statement hub where anything that happens with regard to that in the lead up, I mean, we're slightly too far out at the moment to get some of the leaks that normally happen. So generally the government and HMRC will let certain bits out in the run up. They like to try and test the water and see what the professionals' reactions are to those. And that has in the past, when there's been a particularly adverse reaction, there's been a bit of a hasty rewrite that's happened and have changed those slightly. So definitely keep in touch with the MHA Autumn Statement Hub. We'll be releasing articles weekly in the run-up where we get to know more about what's going to potentially happening and give our view and explain what the effects of those are for business. Other companies will also have, I'm sure, autumn statements and autumn hubs launched as well. The press, I'm sure, will be ramping up their coverage on the autumn statement as and when things come out, because it's a new government. We haven't a change of government for many years. So a new government with their first autumn statement budget speech, it's going to be a big deal. And so there's a lot of press coverage going to be coming on this with analysis of what's going to happen. So I think that's probably the best bets to look out for that.
Perfect. And David, I've seen you've unmuted. Did you have a particular question you were wanting to ask?
Oh, no, that was helpful. I'm just going to give feedback at the end. So, yeah, it's very informative.
Perfect.
Oh, thank you.
Perfect. And Glenn or Steph, did either of you have any questions before we conclude things today? Going to take that silence as a no. So, like we said, everything will be sent out after the session regarding the slides and the recording. I saw that your contact details were on the beginning of the slides as well. So if you did have any questions, perhaps you wanted to take offline for Stuart and Vinnie, please do reach out to them. I'm sure they're more than happy to answer that.
Yes, please do.
Other than that, I'd just like to thank all of you for attending today. And Stuart, Vinnie, thank you both very much for hosting with us. Like I said, I've been Henry, and I hope you all have a great rest of your day. Thank you.